Charandeep Singh, founder and managing director, Girik Capital, as well as Varun Daga, the co-founder and fund manager at Girik Capital, joining us on the show to understand how to navigate the choppiness in the markets and what their sectoral view is. Good to have you both on board. Thanks so much, gentlemen, for joining in. Going to begin with you then, Charandeep, as to what the outlook is on the market at the current juncture, because we were just discussing earlier this morning, we're clearly not taking cues from the rest of the globe, for even from the SGX Nifty for that matter. We seem to be charting our own course, and a lot of the high frequency indicators as well seem to be supporting us, although the FII selling does continue. How is India placed at the current juncture?
Good morning. Morning to you and to your viewers. Thanks. I'll tell you, we have a view that, look, India really was an underperformer. If you look over the last 10 to 14 years, ever since we launched Girik in 2009, I think the Indian markets in dollar terms have barely doubled, right? At the same time, during the same juncture, the NASDAQ is up maybe 5 to 6 times, even after this 30% correction. So, we've been a rank underperformer for a large part of the last 10 to 15 years. We've effectively underperformed even Indian government debt virtually, right? So I think one should really keep that in mind when we judge India right now, and we look at the global volatility. I think the globe has its share of problems. There's an inflation problem. There is a rising interest rate problem. We of course share some of those problems, but I think what's in our favor is that after going through a huge amount of restructuring and reform in the last decade, we're looking up because we have growth on our side. Despite all of the global problems and liquidity tightening, Indian earnings are growing. I think that should be kept in mind. So, hopefully we should continue to make up some of that underperformance that we've suffered in the last 10 to 15 years.
All right, Varun, a lot of the market experts that we've been speaking with have been talking about a manufacturing renaissance in India and how you can really play that theme going forward. Charandeep as well talking about how we have growth on our side. So all of this is the perfect mix to really bet on the manufacturing theme. Would you concur, and how would you think investors should really look at that space?
Yeah, sorry, go on.
Yeah, thanks. Good morning, everyone. So, we've been on the road for the last 2 weeks, domestically and international. And, we've seen that the kind of response what India has now, compared to even a year ago. A year ago, everybody was just talking about the US, the FANG stocks, Bitcoin, crypto. I think now everyone's come back to reality, and they're really seeing that this is one place in the world where there is growth and where money can be deployed. So not just from a market perspective, but even on domestically on the ground, we've seen a lot of companies who are now talking about doing capex in India, and there is clearly a massive manufacturing boom happening. So, I think, of course, this will take its time, but we are definitely looking up. And I mean, we were in Delhi, and we really feel that it's really transformed. The kind of infrastructure that city has, the kind of entrepreneurs we met is just amazing. What India was a few years ago and what it is today. So I think it's very well staged for the next decade.
Okay, some fabulous numbers coming in from M&M, while of course on a year-on-year basis their sales is going to look optically bloated, because remember, same time last year we were grappling with the semiconductor chip shortage. So yes, the sales are up 129% year-on-year, but 9% on a month-on-month basis, and the absolute figure is the highest ever monthly sales number that M&M has clocked. Varun, I'm quite surprised to know, and please correct me if I'm wrong here, no autos in your bullish list?
Of course, we are in autos. I think we do own a substantial part of our portfolios into autos.
I have the top 10 list, top 6, 7 names. Let me count it. 1, 2, 3, 4. Yeah, top 8. I don't see autos. So, auto is not part of your top 8 holdings, is it? Or maybe I'm missing it.
That's what I thought.
We do own some Eicher and Mahindra, I think, and Eicher, you us a good news, on the monthly numbers. But autos have been on our list for quite some time. It's been on our screeners, and we are playing it with these couple of leaders.
Varun, the space that M&M is now growing into, which is your urban SUVs and getting aggressive into EVs now, that's also getting very, very competitive. Just I think a fortnight or less than that back, you had Tata Motors, for instance, launching a very affordable urban SUV, which is an EV, Tiago. Wanted to understand whether you're going to restrict your list to only M&M, or are there other passenger vehicle makers that you're planning to add to the list?
We're not going to get into, where we're going to go, because I don't know, we are always open to look at everything where there is growth, there's momentum, where there's newness. And we really feel that this sector, after a big downturn over the last 2-3 years, is coming back. And we are clearly seeing new leadership emerging in different companies who are trying to launch new products. Managements are changing in some of these talks, some of these companies. So a lot of newness out there. Also, if you see the industry, if you see the car market has not really grown for a very long time. There's hardly been 2-3% growth, but the segment of SUVs has been a very high performer. So what we've clearly understood, that India wants to buy more expensive cars. So rather than buying the entry level cars, so we are all graduating towards better cars, and I think people who are selling good quality SUVs will benefit, and that's the theme we're trying to play.
Charandeep, so what have you added in the recent leg of decline? When I say leg of decline, let's say when markets fell in the month of June, where did you pick your spots? Have you participated in any of the new IPOs?
Is that for me or Charandeep?
Charandeep.
Sorry, I didn't hear you, Nikunj. Yeah, we have, we look at a lot of things. We have participated in one IPO recently. It's a manufacturing company called Sirma. And it's a contract manufacturing company called Sirma. Also, we've adjusted our portfolios. We've added to some of the stocks that we liked, where we're very confident of the secular story and the leadership. So we added to some of our auto exposure, for example. And I think other than that, there were no real recent changes in the portfolio.
Charandeep, again, I have the declared portfolio with me, and it talks about underweight positioning in financials. Some would argue that the bullishness of any country is always centered around financials. If you're bullish on the country, credit growth will pick up, retail growth will pick up, leveraging will start, loan book will start. Is there a conscious reason why are you underweight financials?
Yeah, so Nikunj, when you look at it from a Nifty perspective, the Nifty is 35% financials. I mean, that's a massive overweight. But when you look at the broader indices, like BSE 500, we're not underweight, right? So if you look at our financial exposure, we have some of the leading banks which we like SBI, ICICI Bank. We have NBFCs in there, like Chola. We have a micro lender in there, such as Credit Access Grameen. And Bajaj Finance, of course. So we have an array of financials. I mean, our financial exposure nears close to 26, 27 or a little more percentage. So I think there's a substantial exposure to financials actually. It's just that when you compare financial exposure of the Nifty, it's hard. We're not a Nifty, we're not an index sort of hugger. We will go buy what we like in the sector rather than, try to say that the index 40, we should be at least 30. We don't measure it like that. We will take risk and exposure where we see good leadership, good quality, and good growth.
Charandeep, I missed that part on which you said that I've participated in a recent IPO. Which one was that?
Yeah, there's a recent IPO where we took some exposure. It's called Sirma, SYRMAA. It's a contract manufacturer for certain PCBs. It's basically a company that does contract manufacturing in the electronic space. That's the one we participated in.
You know, that's one company, that's one space where manufacturing is picking up. And if manufacturing is picking up, you would need companies which give you embedded design technology. I think that's the point what Charandeep is trying to make. Varun, what would you not buy in this market?
So a lot of it, if you look at the way our style is designed, we look at stuff that's doing well in a bad market, and that's when autos and cap goods actually came up on our screener. Uh, a lot of people are talking about buying the IT names. They are great companies, but we've still not touched them. We used to own them after I mean, you would have seen that after the pandemic, we are very heavyweight on IT, but right now we don't have a single IT stock. Not that we will not look at them, but we are not real believers of bottom fishing just because the stocks have fallen 30-40%. So we would buy into strength rather than weakness. So I think that's how our style is designed, where we would look at strength rather than weakness. So uh, we do not buy anything that's weak, over a period of time, and especially when there is headwinds about earnings slowing down. So I think one place one should avoid, getting into a value trap is wherever earnings visibility is not there or it's slowing down. So I think we always focus on uh, where next 3 to 5 years earnings are very visible. Whenever there are times where we think that things are not clear, we don't get there. It's not. I mean, it's not wise to go there and hope for things to turn around, and then you realize that you fall into a value trap.
Given the exposure to pharmaceuticals, I understand that that's about 10%. So, what's the overall rationale there? If you could share with us some of the stocks as well owned.
Sorry, that's for me?
Yes, Charandeep, for you.
We don't really have any pharmaceutical exposure at this point. So we're not, I mean, not that we won't look, we are open to looking at pretty much anything like Varun mentioned. It has to meet our criteria. So at this point, no pharmaceutical exposure in our portfolio.
Charandeep, perhaps, in the entire healthcare space, hospital companies related to that?
Yeah, we look,
Yeah.
We're open to looking, at this point, really nothing meets our criteria. So, when we look at stocks, they have to show enormous relative strength in a bad market. That's the first step in our screening process. And that has to be combined with solid leadership and return metrics and also earnings acceleration, right? So we believe that those stocks, if you just think about it, it's counterintuitive. Those stocks that have done very well in the last year are the ones that we are really backing. Now, why is that? That's because we believe money is flowing into those stocks. That's generally backed by an enormous amount of earnings acceleration. So we will look, we are always looking. Not that we found anything yet, but we are open to looking.
All right, I'm just going to mark the markets. And what do we have? We got a wonderful surprise here. In the morning, it appeared that it could be a gap down start, an ugly start, 0.5% or 1% off is what SGX was indicating. But after a good start, markets have not really caved in. We are outperforming and we are outperforming substantially. There go another bit of good news. High frequency data points, which is what we've been telling our viewers, car sales, air traffic, electricity consumption. Adani port volumes are of 15%. I will not pay too much of attention to a year-on-year growth number because of base effect, because of other factors, COVID, lockdown, same time last year. But there is an uptick. And high frequency data points are all indicating that things are moving in the right direction. Varun, there was a time when every portfolio manager had just one caption on their lips. And that is a good old caption I learned when I was in my school. Only Vimal, Reliance Industries. It did exceedingly well in 2020. It did exceedingly well in 2021. Now the stock has taken a backseat. I'm asking you this question because I noticed in your portfolio it's right up there. How would you view a company like Reliance in the light of what is happening on the windfall tax, what is happening to the geo investments, given that retail right now is big but not making huge amount of money. Is Reliance there only because it's an heavyweight, or you genuinely like the business?
Yeah, Nikunj, good question. Because a lot of people ask us, is it just to be safe so that we don't underperform the index? But I think the answer is no. We genuinely like this company. In fact, we really like the whole telecom sector. You would see both the leaders there in our portfolio, and we've been there for quite some time. Uh, we really feel that yes, it could be a little choppy and a little volatile, but I think the sector really has a tailwind like nothing, like no other sector, right? Because you have it's pretty much a two and a half player market, but you really have years of ARPU growth. We really feel that's going to come, and it's really playing out. So I think that's one part. The other is retail. Again, we really feel that retail is a sector that will has a lot of legs. It's getting institutionalized for the first time in India. A few companies will really benefit out of this trend, and it's again a theme which has a lot of legs. So these are the two parts of Reliance, which we really think is very good. And the other part is the cash cow, where where obviously a lot of news and a lot of talk has been about these windfall gains. But for us, we're really playing the retail and the telecom. I think both these sectors, we really feel that there is serious leadership and also earnings acceleration. So I think when leadership meets earnings acceleration, you generally make money.
You said 2.5 players within the telecom industry, but that's the view on Reliance Industries betting largely on retail and telecom. Varun, as well as Charandeep, pleasure having you on board. Thanks much for joining in and sharing with us your outlook, your portfolio, as well as views on the Indian markets.
Thank you.